Good evening.
And Chinese here. So, see you all for conference today for our 5 centenary holding Berhad meeting. And so my apologies for not being there in person as I'm away for business trips in Taiwan.
It's okay.
Okay?
Yeah, it's understandable.
So, back to business. Okay, as you all know that for the past year there has been uncertainty in the economy due to the oil prices. But I am pleased to announce that our company, the stock market, our market share remains 55%, and this means that our position as the nation's leading sugar is still remains fixed. So throughout the past years, we have managed procurement of raw sugars efficiently, which is our main stock in refined sugar production, with a total workforce of 1,205 employees. And currently, we have already engaged with communities, government agencies, and regulators with program participation for the company itself. So this is the report of our company in 5 years. So let us take a look on the global sugar outlook and also the market trends nowadays. For the past 5 years, the production and consumption is remained unchanged, and it's going to be a big high challenges to us because we need to be cautiously optimistic with the current economic situation. So the coming preparations, I believe that your team has done your part to prepare the business proposal for the upcoming years. And I would like to start our discussion today by Ms. Dashni. So what is your plan for the upcoming years? What is the revenue and also the budget plan?
Yes, thanks Neil. Good evening guys. Okay, as you guys know, our main 3 products for our sugar refineries: brown sugar, white sugar and icing sugar. So as for 2017, we have actually estimated a total revenue of 8,598,560, and together with that, we have also estimated the cost of goods sold, which is divided into 3 under direct labor, direct material and cost of production overhead, which totals up to 8,034,850, which gives us a gross margin of 563,000 for the year 2017. And we have to also include the supporting overhead, which includes of marketing and promotion costs, which totals up to 265,000 for the year 2017. And deducting the gross margin out of this, we will get a pre-tax profit of 298,710, and it's also deductible for income tax, which gives us a net profit of 215,071. But this is just an estimated figure. It may increase and it may decrease during the coming months. It depends on how fast is our production for the year of 2017. Thanks, Neil.
Okay, thank you, Ms. Dashni. I surely hope that our revenue increase more than what we estimated. So let's proceed with the next. How about our cost estimation and also cost behavior? Is you explain more about it?
Sure. Regarding the cost estimation, we have 5 types of cost estimation. The first one is accounting analysis. Then the second method is engineering. The third is high-low method. The fourth one is visual fit method, and finally is the least square regression method. Yeah. So looking at these 5 cost estimation methods for our sugar refinery, the best methods would be accounting method, high-low method, and regression method. So we can apply all these 3. So let me start with the accounting analysis method. So based on our ledger accounts, it is precisely determined that our direct material is variable cost, the rental of factory building is fixed cost, while the utilities cost for our factory is semi-variable cost. Since the variable cost is semi-variable cost is of our utilities consists of fixed and variable costs, we have adopted hydro method. Now, on the other hand, the least square regression method is another method to estimate objectively the cost behavior pattern using available data. To ensure the cost driver that we have selected for the variable cost, which is the utility cost, as a grid correlation with its cost, we have used a least square regression method. Yeah. Our cost driver is number of machine hours for tons of sugar purchased against the utility cost. From our regression method, it is evident that higher R square of 0.97 showed that there is strong correlation between the number of machine hours, which is the independent variable, and the utilities, the dependent variable. Right? In my opinion, these three methods are relatively more accurate than visual fit method and engineering method. Reason being, the scatter diagram provides little or no information about the correlation outside the relevant range. I think that's all my input for the cost estimation. Thank you.
Okay, thank you, Mr. Siva, for your input. It's nice to know that, according to your reflection, that you can completely assure that the cost estimation is going to be what we expected. Yeah?
Yeah.
So, we go next budget business proposal. How about the cost statements for the upcoming years? Which Adham to explain more about it?
Yeah, my pleasure. Thank you, Neil. All right, moving on from Dashni and also Siva, I'll present to you what we have done, what we have agreed about costing statement. Okay, basically from the data that we have from Dashni and Siva, we have done some work in terms of costing statement analysis. We have actually done all 5 costing statement analysis, which are absorption costing, contribution margin costing, activity-based costing, and target costing for both absorption and also activity-based costing. And we are of the opinion that contribution margin costing is the best for our business model. It is simply because it is very easy for us to know the amount that we need to cover the fixed costs and generate profit for each particular product. And contribution margin also basically is a cost accounting concept that enables us to determine the profitability of individual products. So the term contribution margin will help us to determine the profitability per unit of each individual product. So we can evaluate different areas of products within the services or the business itself to see where is our strengths, and we can emphasize our activities and our resources there. Okay, and basically, just to illustrate an example for the sake of discussion for today, I would like to highlight our contribution margin for our white sugar, which is actually 0.55 ringgit per kilogram or 55 cents per kilogram. And from the contribution margin, this is only costing statement analysis that helps us or allows us to determine our break-even points, which is actually 921,000 kilogram, 963 kilogram. And from there we can determine our the sales that we need to achieve to achieve our break-even points, which is 2,747,451 ringgit. Just a recap, this contribution margin will be continued to be applied in our business model because basically it is very useful for us, the management, to when it comes to making decisions in terms of pricing, especially in the situation of special order. And it also let us know what product is the most profitable by the negative or the low contribution margin, because the low or negative contribution margin indicates a very low profitability. And it also helps us to solve the bottleneck because, for example, we can focus our limited resources to where the profit profitability is. So basically that is what I can share from my end. I believe you have the better details in the attachment that I've emailed to you. Back to you, Neil.
Okay, thank you, Mr. Adham. I will review of all your contribution cost margin later. I appreciate about the profitability. So we're gonna discuss it again during our next meeting, yeah? So let us continue the next, which is decision making for the upcoming years. So based on Ms. Dashni, so Mr. Adham, present just now. So what this is about the best strategies also decision making for the upcoming year.
Okay, thank you, Ms. Neil. So I would like to go to the importance of decision making. Decision making, as you all know, is a fundamental part of management. So in accounting, the objective is to not necessarily make the best decision, but to make a good one. So let's first talk about special order. Special order is a one-time order that is not considered part of the company's normal ongoing business. So when we are analyzing the special order, only the incremental costs and benefits are relevant. Therefore, if we were to accept the special order, the sales price per unit should be higher than actual price offered. And since our companies have the capability of producing more production, we would choose to accept the special order, which will generate a more positive margin for that particular month. Moving on to the next one, which is the CapEx decision. After a thorough study and discussion, we agreed to proceed with the CapEx investment proposition, which is to build the new manufacturing facility. This decision was made after analyzing the value of internal rate of return calculation, which gives us a 1.80%. So from here we can see that the positive internal rate of return shows that our decision will bring a positive prospect of the present investment. Okay, moving on to the third decision making, which is the add or drop service of product. If our company, the Funtastics 5 Holdings Berhad, needs to reduce its price in order to recapture the market, they will actually make a loss of 25,000. But however, if they decide to shut down or discontinue the production of brown sugar, the loss will be even greater, which is almost 600,000. Therefore, we have chosen to actually maintain the current production of brown sugar, even if we have to reduce the price. This is to avoid a greater loss. And we have the option of outsourcing. For Funtastics 5 Holdings Berhad, we can see that the gross profit will actually increase by 5.2 million if we outsource the procurement department of brown sugar to Vantage Logistics Berhad. The increase is contributed by the reduction in procurement function for brown sugar and focusing more to the other two main products. Since the production of brown sugar is the lowest compared to white and icing sugars, management believe it makes more sense and cost beneficial for the company to actually realign the procurement resources appropriately for these two products. And last but not least, we have come to the part whether to sell or to process further our products. We have reassessed the number, and if we were to process further our current products into a zero-calorie sugar, it will bring up a higher cost. However, if our manufacturing line decided to process, if our manufacturer decided not to process our current production, the total loss that we will make is lesser. Therefore, we have agreed that we shall not process our products into zero-calorie sugar and just maintain to where it is right now. That's it from me.
Okay. Okay, thank you, Ms. Izzatul. I will take a look more on the brown sugar and also the lost profit later on. So, thank you all. I have heard all the proposal that has been presented to all, and before I'm going back to the problem 4, I will review the proposal again.
Sure.
And be prepared, because I believe
See you again.
Thank you.
Have a good
Thank
stay in
you.
Taipei.
And maybe.
Bye bye.